Good morning and welcome to Gabelli's 17th Annual Media and Sports Symposium. We're very excited to have everyone here today. So I'll be kicking off the morning with a brief introduction, and then we'll jump into our first session with EW Scripps at 8:30. This year we have a strong lineup with 13 companies or organizations doing presentations, fireside chats, or panels, with an additional 6 companies participating in one-on-one or small group meetings as well. Just running through the agenda quickly, we'll start our first session with EW Scripps and then move on to TVB, followed by Rogers Communications. At 10 a.m., we have a media and telecom regulatory expert session with former FCC Commissioner Robert McDowell. 10:45 is Nexstar Media Group, 11:15 Ryman. At 11:45, we'll take a quick 15-minute lunch break as we prepare for the sports panel, which kicks off at 12 o'clock, followed by Tegna at 12:45, Reservoir Media at 1:15, the Braves at 1:45, Lionsgate, Sinclair, and then we'll wrap up with Genius Sports at 3:15 p.m. We also have 6 companies doing one-on-ones: AMC, Gray, Live Nation, Madison Square Garden, Sport Radar, and TKO. We anticipate media consolidation will be a big topic today. Consolidation remained robust through 2021 with the Discovery and Warner Media deal, Amazon's acquisition of GM Studios for $8.5 billion, and then Gray and Meredith, as well as Tegna in the broadcast space. However, things slowed down a bit in 2022, primarily as a result of regulatory scrutiny. Last year, we saw the Paramount and Skydance transaction announced, which is expected to close sometime in the first half of this year. We have a number of these companies joining us today, and we'll be discussing the dynamics and drivers, as well as the outlook moving forward. So diving a little deeper into some of the trends that we see, we continue to see digital media take share from traditional formats, as demonstrated in the chart here. American consumers spend around 8 hours of their day with digital media, roughly double the time invested in traditional formats. The shift in consumption towards digital media really started in 2018, and this trend has been growing ever since. Traditional media, while still important, is losing the attention of U.S. consumers. This chart shows U.S. pay TV subscriber trends through the first quarter of 2025. The top line in the darker red shows the year-over-year change in total subscribers, which includes both linear and virtual MVPDs, while the bottom yellow line shows the year-over-year change in just linear subscribers. We're seeing improving linear trends, which we think will endure, while virtuals are slowing slightly. This shows another representation of the same data, highlighting how the U.S. pay TV landscape continues to change through the first quarter of 2025. The bottom red bar indicates linear pay TV subscribers, whereas the lighter purple bar on top shows the virtual MVPD subscribers. Virtual MVPDs are becoming increasingly prevalent as younger consumers continue to shave and cut the cord, and these services continue to take share from traditional pay TV. The growth in virtual has helped offset some of the declines on the traditional side, although not fully. These are some of the key virtual MVPDs available today. YouTube TV and Hulu Live TV continue to lead the pack. We continue to see a proliferation of over-the-top and services and streaming platforms. The industry continues to rationalize, with content companies pulling back on the growth of spending, and management teams focus more on the path to profitability than growing subscriber numbers. We also continue to see more bundling in the space. FAST services also continue to see growth, led by Fox's Tubi platform.
Chris Morangi is a co-CIO, and Sergey Blazewski, Hanna Howard, and Justin McAuliffe are portfolio managers Gabelli Funds. This podcast is an excerpt from Gabelli Fund's 17th Annual Media and Entertainment Symposium. GAMCO is providing these links as a matter of general information. We do not intend for these links to be a complete description of any security or company, nor is it a research report with respect to any of the companies mentioned herein. As of March 31, 2025, affiliates of GAMCO Investors Incorporated beneficially own on behalf of their investment advisory clients or otherwise approximately 31.43% of Atlanta Braves Class A, 6.32% of Class C, 11.32% of Sinclair, 5.41% of EW Scripps, 2.67% of Gray Media Class A and less than 1% of Common, 2.41% of Tegna, 2.25% of Ryman Hospitality, and less than 1% of all other companies mentioned. The analyst's views are subject to change at any time based on market and other conditions. The information in this posting represents the opinions of the analyst and is not intended to be a forecast of future events, a guarantee of future results, or investment advice. Views expressed are those of the analyst and may differ from those of other GAMCO officers, analysts, other employees, or of the firm as a whole. Because the investment personnel at Gamco and our affiliates make individual investment decisions with respect to the client accounts that they manage, these accounts may have transactions inconsistent with the information contained in this posting. Certain Gamco personnel may know the substance of the posting prior to its posting. This webcast is not an offer to sell any security, nor is it a solicitation of an offer to buy any security. Stocks are subject to market, economic, and business risks that cause their prices to fluctuate. When you sell shares, they may be worth less than what you paid for them. For more information, a prospectus, or summary prospectus, visit our website at www.gabelli.com or call 800-GABELLI 800-422-355-4914, 921-5100 fax, 914-921-5118 info@gabelli.com.